tenths of a percent or so, and the small cap index that's gaining about 1% or so. As a result of which, I would definitely be right in saying that the market breadth is tilted in favor of the advances. It has closed just a tad bit, but it still remains healthy at this juncture. Let's take a look at the sectoral picture, and today IT seems to be where the brunt of the selling is, and you have losses of about 1% or so for the benchmark IT index. But what is working? You have the defense pack that's up and about, you have FMCG, oil and gas, and well, a couple of others, consumer durables. These are a couple of these packs have actually been under a little bit of pressure earlier on in the week, and they're seeing a little bit of green, and that's good to see as well. The PSU banking pack as well, gaining about 0.7% or so. I also want to look at the Nifty Bank and the constituents of the Nifty Bank, because I think that the private sector banks are not doing particularly well in trade today, and that seems to be the case. HDFC Bank losing about 0.6%, Axis not doing too much, but you have Kotak Mahindra Bank that's up and about and gaining about 1.8% or thereabouts. You have ICICI Bank about 0.6%. But I'm just wondering, are there any big movers on the back of news flow?
Definitely. There's BSE, which is, topping the chart of the BSE 500 or NSE 500. And this is because they've now said that they'll maintain expiries on Tuesdays and Thursdays. They will. It's not official out yet, but they might consider this as the news flow is in. And the stock is up 14% on the back of that. There's something like Bayer Crop Science, which is buzzing. DCM Shriram is up around 6%. Hindware Home Innovation is also up. Stocks like NIT, Learning, Carborundum, Universal, P&G are doing well in trade today. Hindware is up 7%. ZF Commercial also seeing gains about 5%. There's Capri Global, which is up by about 4%. So all of these counters are doing well in trade today. Some counters which are seeing pressure are something like a Garvey Technical Fibers, which is down by about 8%. Aegis Logistics also not doing very well in trade today, down by about 7%. Indian Overseas Bank down by 6%. Kesoram still under pressure, down by about 5%. I think it's the 4th or the 5th day where Kesoram is seeing significant pressure, down by about 5%. Jaiprakash Associates down by about 5%. Thermax, CEI, Infosystem, all of these counters not doing well in trade today. So a whole host of stocks that are doing well and not doing well in trade today.
And particularly from the broader markets as well.
And
some of these stocks have actually been gaining from strength to strength. ZF actually is an interesting story, right?
Yeah.
And that happened earlier in the week, the uptick that it saw. In fact, let's pull up the weekly chart to see where it is. And there you go, 13% or thereabouts in just about a week. Of course, the update was with regard to use of certain technology in vehicles, and I'm sure that you caught that earlier in the week. But let me get our experts in today. We've got Sameer Dalal of Natvarlal & Sons Stockbrokers, and we've got Jatin Gedia, who's a technical research analyst at Mirai Asset, Sher Khan. Gentlemen, thanks so much as always for taking the time, and happy Friday to you. Let me start with the first question, and this is to do with KPIT. And we've got Dilip from Kolkata, who's bought at levels of 1,462, and he's incurring a loss at this juncture, not a very large one, but he's wondering what to do. Should he add more at the current juncture, or should he hold? Jatin, I'll come to you on the charts.
See, in the case of KPIT or the IT stocks, we believe that the trend is still negative. So I believe that in this recent up move that we have seen, IT stocks have performed the least, and I believe that KPIT is also, underperforming. I believe that there is still more downside, and hence I would refrain from, suggesting him to average at current price. So if he still holds on, then 1220 is the stop loss level. Just in case these things go a little on the downside, then 1220 is the level below which he should exit his trade. As of now, averaging is not suggested.
Okay, and did you give a target for this, Jatin?
Yeah, so on the upside, I think 1420, 1440 is the level around which we have the 40-week average resistance. So if the prices move towards these levels, then he should consider exiting his trade.
Right, so that's the view with respect to KPIT Tech, where technicals are concerned, of course. The next counter that we're talking about is Trident shares. Teja from Nellore, Andhra Pradesh is holding around 6,000 odd shares at 53 a piece, and he wants to know whether he should sell or hold at the current price level. Sameer, any view on Trident?
Yeah, so we do have a view on Trident, and unfortunately, your caller has bought it at an extremely high level. This was a few years ago when the stock was on a tear and ran up all the way to 70. Look, at the end of the day, they are a towel and bedsheet manufacturer, which is the largest part of their sales. They do have some amount of chemicals and some amount of other things, but that is a very small percentage. And if the US is serious on reciprocal taxes and they put on some sort of import duty on these towels and bed sheets and things like that, I think Trident could go through a bit more of pain. Um, I'm not entirely sure that this is a stock to continue to hold at this point of time. So I would advise book your loss and find better opportunities to invest in.
Book your losses in Trident is a call. Teja, hopefully that answers your question. Kokila is calling us from Tamil Nadu. Hi, Kokila. Good morning to you. And how can we help you today?
To both.
Please go ahead. Good morning.
Yes, sir. I have bought Cochin Shipyard at 1700,
Okay.
11 quantities.
Okay.
Can I add little more? And I thought of investing 30 to 40K around that for a long term. Maybe
Okay.
long term in the sense for 2-3 years kind of time.
Got it. Got it.
So can I add some more quantities or what shall we do?
Yeah.
Or shall I leave as such?
It's a good question, and since you have that 30,000, 40,000, let me also ask Samir whether he thinks this is the best avenue for you to deploy that, or whether there are other opportunities that are perhaps better. The valuation comfort is more, one would argue, than it has been in the last 1 year or so. So what's the view on Cochin Shipyard?
Okay, so relatively, yes, you're right. I think, Alex, the valuation comfort is definitely better, but the problem still remains that on an absolute basis, it's still not cheap, right? The correction has brought the valuations down to, I think, 36 times or 37 times FY26. And if we project a 15 to 20% growth, which is expected in the next year, we're closer to 29, 30. Now, at 30 times for a company that relies heavily on defense projects and ship repairs and things like that, there could always be some amount of delays in execution, delays in receiving orders, whatever it is. I mean, the margins may not work out the way they had planned. So from that perspective, I still think the stock needs to see a bit more of a correction to buy. Long term, we remain positive on all these companies like Cochin, Masgao, and all of these shipping, repair, shipbuilding companies. But we would prefer to buy it at a better valuation if we want better return. So if you ask me, should you add right now? No. I think there are other opportunities which are available at much more attractive valuations. I would not advise you outright to sell, because if the stock does correct more, then I would say please add on, because long term we remain positive, but on valuations we have discomfort.
What would you deploy in if you have 30 to 40,000? Would you advise doing so right now?
So, banking is one space that we remain very positive on and constructive for a very long time. The stocks have actually underperformed our expectation over the last year plus, but we believe that cycle is beginning to turn. We think if you want to take a relatively safe bet, I think the easiest play at this point of time is HDFC Bank, right? If you want to take a slightly more risky play, IDFC First Bank, and if you want to take a even riskier play, at this point, which I'm doing, I can say I'm doing it, is buy IndusInd Bank, because I believe that the worst for the bank is over. It's trading at a steep discount to its book value, and once the clarity comes on what the loss is going to be, and once they finish providing it by the end of this quarter, I think it's back to business for IndusInd Bank, and that is where the valuation re-rating can happen. So I like the banking space per se. And that's where I would deploy.
Okay, but just to follow up on IndusInd Bank, since you brought it up, and today is an important day in the context of what has happened so far, right? Because you have the PwC report that is going to come through as an external auditor, and that will come to the board. Would you suggest, and of course you've mentioned that this is a high risk strategy, so you should be willing to take further capital losses, but would you suggest that it might be better for investors to wait for that clarity to emerge if there are worse discrepancies that could come up in that report?
So there are two ways to play this, Alex. The first is you buy it and you keep a strict stop loss and you work on that, right? The second way is you wait the clarity emerges. It comes to the what the management had guided, and it's done and dusted. But the stock is 10% up. Then you end up buying it 10% higher. Now from I'm just giving a simple understanding of how I look at it. From 650, if I'm taking the risk, from 650 to if it goes to 900, my return is about 250 rupees on 650, which works out to 40%, or a little more than about 40%. But if I buy it at 750, it goes up 150 bucks on 750. My return gets capped close to 20%. So the differential in that 10% higher could be the 20% return that you could lose out on. So the way I like to look at it is, if you want to buy, the way to buy it is buy it with a strict stop loss. You can buy puts in place of that. So if the stock goes below a particular level, that's your insurance, and then you are okay. You're okay to hold on to the stock for a longer period of time.
So, and that's a very valid strategy. I do want to point out that there are people on the other side as well. For example, one brokerage that comes to mind, MK, for example, has removed IndusInd Bank from its model portfolio. And what they have said in their note is that while there is attractive valuation at this juncture, and they expect that business will eventually emerge and go back to normal, they think that they're better off waiting for discrepancies to be solved before they take a call once again, and they're okay with losing out a little bit of the upside. So understand what your risk profile is and decide what you want to do based on that, is the limited point that we're making.
All right, so that's the holistic view of IndusInd Bank, and it was like Alex, you mentioned earlier also, it was important to discuss this counter because it's been under pressure since past 3 weeks now. Moving on to our next counter, IRFC is the next counter. Manu from Bengaluru is holding 1,000 shares bought at 25 a piece. He's sitting on a profit of 1 lakh rupees right now. Jatin, what are the charts indicating for IRFC? Should he book some profits now or should he keep holding?
No, I suggest definitely some profit booking is definitely advised. And we on the weekly charts there is a trend reversal, so there can be a further upside towards 140, 142 odd levels. But I think considering that he is sitting on a decent amount of profit, some amount of profit booking is definitely advised. He should keep a trailing stop loss of 122, that is a 20-week or 20-day moving average. So below that, he can further, reduce his position. But as of now, he should do some amount of profit booking, and some he should keep for targets of around 142 on the upside.
I'm sorry, did you give the stop loss for this counter?
122, that is the 20-day average.
Okay, perfect. All right, thank you, Jatin, for that. Moving on to our next caller, Keshav Rao is calling in from Visakhapatnam. A very good morning to you, Keshav. How can we help you?
Good morning, madam. I purchased about 45 shares of Dixon Technology at the rate of 17.5, 17,500.
Yeah.
Now, since then the share is coming down, and should I add more or should I exit with a stop loss at a particular rate?
Got it. And Keshav, you saw the charts before buying the counter, or was it the fundamentals that you saw?
No, I purchased it in the secondary market, madam. Very recently, about 2 months back.
Okay, all right. And you want to hold it from a longer term perspective?
Yeah, madam. About 1 year, 1.5 years, no issue.
All right, okay. Samir, I'll take this up with you. Dixon Tech, what's the view like?
So unfortunately, again, your caller has bought it at the peak almost. And look, the opportunity for EMS companies and Dixon in particular, given the kind of product of, not the product, but the kind of customers that they have, they're probably going to be able to grow their top line by a 50% CAGR at least for the next couple of years. Because the opportunity is quite large, the margins are decent, and the operating leverage to some extent will start playing through. So the profit margin also should move up marginally, which will allow the profits to grow. So we are talking of profits growing at maybe 65-70% CAGR over the next couple of years, which is excellent. The simple problem is you're buying it at extremely high valuations. It's trading in 3 digits. Now, even if we assume a 60% growth in profitability for next year, the stock will still be trading at close to about 62p 1 year forward. And when you're buying something 1 year forward where there's so much uncertainty, so many global issues going on with trade wars and things like that, how things could negatively affect it could matter. So one one quarter miss in earnings or 2 quarters miss in earnings, and the stock could see a massive nosedive. So as much as I think it's a great company doing extremely well on fundamentals, valuation discomfort forces me to say I wouldn't buy at this point either. I would like the stock closer to, if you ask me a fairer price for me to buy, would be closer to 8,000-9,000 rupees. It's still a long way away. It may happen, it may not happen at all. But from a fundamental view, I mean, that's when I can justify a buy. At this point of time, I would not justify a buy. You can probably hold on if you like, but I wouldn't expect much return. Maybe you could recover your capital over the next year or so.
All right. I'm coming back to you on this next one because I haven't seen Ashok Leyland today, actually. Let's pull that chart up and see what it's doing in trade today. Yesterday, it was under quite a bit of pressure because the development that came through and what the street focused on was the increase in the pledge by the promoter, and that has gone up quite considerably. We've got Dinesh, who has bought at levels of 246, and so the stock price loss or the capital loss that he's incurred has been in the very recent past, I think. What should he do? Should he buy more, or should he hold on to what he has, or should he exit is the question. Samir, I guess to a certain extent this was it was coming if you understand what's happening with IndusInd, and of course the promoters are essentially the same, and so you can tie all of that together. But Ashok Leyland as a fundamental or as a business and the fundamental call, what would you do?
You very rightfully said, Alex. This was probably on the cards given the fact that the stock had corrected, and of course the promoter entity has borrowings abroad for which they have to put some amount of collateral. So they've given Ashok Leyland as collateral. So we should have seen that coming. Now coming to the business, which is the more important factor to focus on in this individual company. The fundamentals of the company are quite strong. What they've announced recently is that one of the loss-making units in UK they're going to try to see how they can wind that down and shut it off. Now, this is a loss-making entity. So when you shut down a loss-making entity, obviously in the initial days, you will have an extra additional cost upfront because you'll have to give certain amount of salary, not incentives, but like some sort of layoff kind of way or wages or something to the employees at that plant. So that will jack up costs in the near term. But over a long-term period, that's actually quite positive because once you're done with the pain, then that recurring pain, which they've actually been bearing for the last many years, which the management said will come to an end. So the overall profitability of the company will improve. They will redeploy those assets that are there at that factory and other units of theirs, which will allow them to ensure that the capital is used and utilized better. So their ROEs and ROCs should move up. So this is a long drawn process. It will take time. For me, if you're asking for fundamentals, the valuations are good. Yes, right now the market is very focused on the Hinduja group because of the negative news flow, and the pledge is something that's playing on people's mind. But once the dust settles on everything, maybe it could be the end of today or maybe in the next 10 days. I think you'll see the group stocks probably rebound if the report that comes today is not as negative as everyone is expecting it to be. If it ends at the management gave at 2.5% of the book is the problem, and that ends up at that and they write it off, I think you'll see a lot of the problems over because the market is forward looking and they'll be focusing on what is going to be the earnings for the company going forward. And for that purpose, Ashok Leyland's earnings are expected to do well. Their bus business, their trucks business in India is going to see traction. So I think this is a decent time to start accumulating or adding some more stock.
So, and thanks so much for that comprehensive answer. I think anybody who is contemplating or is currently owning Ashok Leyland or indeed any of the companies that are owned by Hinduja, and here I mean effectively we're talking about IndusInd and Ashok Leyland, please bear in mind, if you missed some of what Samir said, scroll back and listen again. But let's talk about the next one, and we've got Subhash's question. Subhash is calling us from Nellore. Hi Subhash, good morning. How can we help you?
Good morning. So my query is regarding Mamata Machinery.
Okay.
So I already hold 16 shares of currently. So I'm looking for a short-term investment for 6 more.
Okay, so
increase the shares or?
You got this. When did you buy this?
Yeah, I think during IPO.
During the IPO. Okay, so unfortunately, it's going to be difficult for us to give you a short-term view unless Samir can give us something, because this is effectively a very small company. Samir, did you look at the DRSP? Did you look at this company? I'm not sure. 900 crore.
There were so many IPOs, Alex. It's difficult to go through all of them when you already have so many in the listed space you're constantly working on.
I don't blame you, but if you're talking about a business that is in the machinery space, it's in bag packing, packaging, plastic extrusion parts. Look, I'm not sure if you can draw a parallel with something, and it's not really a big industry per se, not like automotive at least, so you can't give me a comprehensive view. But if you have bought a stock at 600 in IPO and it's currently 368, 16 shares, in terms of pure strategy, would you hold for the long term just to see if it turns around?
If you bought for a listing pop, it doesn't make sense to hold on.
Yeah.
If you've studied the company and bought it and you felt that there was good growth opportunity, it doesn't hurt to add on some more. So it depends on what you saw and why you invested. Just to take a call on the fact that it's trading at half the price of the issue, or lower than the issue price.
I'm sorry, I didn't catch it, but it is trading higher than its issue price, 50% or so. The issue price was 243. It's trading at 368. So seemingly he's bought at the top, at the peak.
So if he's bought it at the peak, it's probably because of the euphoria of the IPO market back then. Again, why has he bought it? Has he studied the company? If he has, because I haven't, so I can't comment. But if he studied it, he feels valuations are good. So I'll just say something that I'm someone who follows what Warren Buffett says, and I read a lot about him. And he says if you buy something at $50 and you thought it was attractive, and you're getting the same thing at 30 rupees, why should you not buy more? Your eyes should open up and you should be happy that you're getting it, unless your study is wrong. But if your study is correct and you're getting it so much cheaper, it's a discount you're getting, which is a great thing. So, I mean, to your caller, if you know the company's fundamentals and you think it's good, please go and add on. If you've just bought it on some speculative thought or somebody telling you this will go up, then probably study the company, and if you don't think there's anything in it, sell it off.
Valuable insights coming in
100%.
from Samir once again. Thank you so much for that, Samir. All right, the next query is on Premier Explosives. Pawan from Bengaluru is holding at the price of 755, and he's bought 225 odd shares and sitting on a loss of 91,000 odd rupees right now. He wants to know whether he should hold it or sell it. Jatin, what's the view like on the charts?
See, we believe that the stock is still in a downtrend. It is unable to cross the 40-day average, which is currently placed at around 375. So I believe that the trend is negative, and we are likely to witness further fall towards the level of 310. So I think he should exit his trade at this point of time.
Okay, so that's the view with regards to Premier Explosives. The next caller that we have is Suresh from Hyderabad. Suresh, a very good morning to you. How can we help you?
Yeah, hi, very good morning. So I am planning to take an entry on Max India in this correction. So is it right time to take an entry on Max India or MediAssist?
Okay.
I am looking for the long term. It's more than a year.
Okay, more than a year. Okay, Samir, I'll come to you again. Max India or MediAssist? Which one should he enter now or none?
So unfortunately, no coverage on Max India.
Okay.
MediAssist is something that is in the medical space, which we studied. Again, we don't have active coverage, but we've studied the company, and I can tell you a bit about it. At the end of the day, this is a company that is going to see some decent amount of growth given the kind of expansions that they have lined up. Valuations are a little expensive, which is why we didn't cover it. But then, in this space, valuations have remained expensive for some time. If MediAssist corrects closer to, say, 380 levels, we would think it looks attractive from a longer term perspective. So that would be the one I would like to say, because I don't cover the other one.
All right. So we have to take a quick break. Jatin, I understand you have to leave us. Thanks so much for joining us today. Happy Friday to you. Thanks so much once again. We have to take a quick break, as I mentioned. We'll be back on the other side to take more of your questions, so do stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
You are very upset with brokers.
Why in this internet world do you need a physical person to show you houses, and why should I pay 1 month of my hard-earned money of rent to this guy? The way in which it has evolved in India is that even a panwala can become a broker.
So you were bored of the steady paycheck at the end of the month.
So I think it was a sort of midlife crisis as to where am I going. One day we saw that some 50-60 people are standing outside the building, but they were actually brokers who wanted to break the office.
Buy or rent?
Rent. If you are not looking for emotional well-being.
Would you suggest that everyone who wants to leave their 9-to-5 job should do it?
I think huge amount of drive you should have. Just because you had a fight with your boss doesn't mean that you leave your job.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Welcome back. You're watching Ask Profit. A quick check on the markets. The benchmarks have turned green. Let's pull up the Nifty 50 and let's also see the broader markets then. The Nifty 50 is up by 0.15%. The broader markets in Midcap 150 is holding the strength, up by about 0.9% and probably at its day's high, almost at its day's high. And the small cap 250 is up by about 1%. Let's also pull up the Nifty IT. It's off its day's lows. Let's pull up that chart and see where it's trading at right now. There you go. The Nifty IT is down by about 0.7%, but off its day's low, definitely. So that's with respect to the markets. But viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screens right now. We have our next caller, and of course, we're also joined by Sneha Seth, who's senior analyst at Angel One, who's joining us now. Sneha, welcome to NDTV Profit. All right, we'll move on to the next caller. There you go. Ajay from Ghaziabad is calling in. Ajay, very good morning to you. How can we help you?
Very good morning, ma'am. I'm holding Indigo Paints 10 shares at 1392.
Okay.
It was bought 1.5 years ago, but not moving up.
Right.
Rather, it is going down.
Okay.
So whether I should exit, hold, or add some more.
Okay, got your point, Ajay. I'll take your question up with Samir. Samir, your take on the entire paint space, as well as should he continue to hold Indigo Paints? He's sitting on a loss of around 4,000 rupees.
Yeah, so I think he can continue to hold on to answer the second part of your question. And the reason is the first part of your question, what's my view on the paint industry? You know, there's been a lot of negativity around the paint industry ever since Grasim entered the space. Of course, JSW did, but JSW's entering is in a much smaller capacity compared to what Grasim has done. And Grasim is trying to capture a massive market share. But their market share competition is obviously not with Indigo, but more against Asian Paints and trying to break that monopoly because of, not monopoly, but the large share that they have. We believe as the housing space in India continues to grow, refurbishment of homes continue to happen, the opportunity for the paints industry is still quite strong. Indigo is one of the more regional players. He's not a per se pan-India player. He is, but more of his sales come from a particular region, which is the western region. And we believe the growth opportunity for Indigo is quite strong in that space, given the fact that they already have a brand presence and they're expanding their reach and distribution reach, which will allow them to get operating leverage and things like that. So yes, competition is there. But pricing and margins has not come under that much pressure. I don't think people are going to change their paint campaign that they buy because somebody is selling it at a little bit lower, because it's at the end of the day, the paint cost is actually a very small percentage of the overall cost of doing the activity. It's the labor that takes more of the cost into it. So it's not going to be like these companies are going to have to cut prices. Maybe some margin pressure in the near term, but overall we believe the space is only going to see more growth. So these are buying opportunities. If you ask me, Indigo is trading at about 32 times trailing. I think it will be around similar levels for current year. But we believe as the growth happens, the company has some upside potential. Would I recommend averaging right away? Probably not. But hold on to it, and I think the stock can do well over a period of time.
Okay. All right, we've got a next question on Trent, and Jinsen is writing in from Kerala. He has pointed out that his power supply is just gone, but Jinsen, you can catch this on YouTube later perhaps. He's thinking of buying 100 shares of Trent, and he's wondering if this is a good time. Sneha, what's the view on the charts?
If we look at the overall chart structure, this counter has corrected, and from last couple of weeks, we are seeing some buying interest precisely from the 89 EMA on the daily chart. Looking at the overall chart structure, I believe we may, if someone wants to take a fresh long, they can keep a stop loss of around 5,300 and go long over here. The first target would be around 5,750, and once it moves above 5,750, we can expect a move at least towards 6,100, 6,150 zone.
All right, so that's a comprehensive. Did you give us a stop loss as well on Trent if you initiate right now?
Yeah, 5,300 the stop loss.
Okay, all right, so there you go. That's a comprehensive view on Trent. We've got Shankar calling us from Bengaluru. Hi Shankar, good morning, and how can we help you today?
Hi sir, good morning sir. Varun Beverages 500 quantity, average price of 520. Profit book or sell sir, or extra share buy sir.
Okay, I got your question. Sneha, on the charts, would you be able to tell us, he's bought at 520 level, so he's in the green. Should he hold for further gains, or should he book out right now?
I think he should be holding it, because if you see the chart structure, this counter has been taking resistance around the 89 EMA on the daily chart. But we also had given a long position in this counter yesterday. So I believe one can hold it. There is no harm. I think unless and unless this counter is trading above 510, 500 zone, there shouldn't be an issue. In case of any move above 550, I believe there will be some momentum coming in which can bring it towards 600, 610 levels. So I would suggest keep holding with a stop loss of around 510 for now.
So that's the view with regards to Varun Beverages. The next counter is Biocon. Rajan from Kerala is holding 800 odd shares at an average cost of 248. His current profit is around 75,000 odd rupees, and his holding horizon is for 5 years and plus. He wants to know as to what is the next course of action. Should he add more, hold, or sell and book profit? Samir, what's the view like?
I think he can hold on. There's no point adding at this point of time. He's good in the money. Look, the opportunity for Biocon, the biologic space in the US is there. There's obviously an overhang of what the Trump tariffs do on the pharma space and how it affects someone like a Biocon. But you got to remember, at the end of the day, these are medicines which are going to be needed irrespective of whether they're being higher priced or not. So I don't think it would affect them. Tariffs would only make the medical costs higher in the US. It wouldn't affect Biocon supplying the drug from here. They have a good pipeline of products which they are testing, which some of them will come for approvals and launch in the US. As those keep happening, we think the top line and profitability can grow further. So since you're well in the money and you don't need the money at this point of time, hold on. I think there's more upside for the stock over a period of time.
Okay, so that's the view with regards to Biocon. We have our next caller. Anvesh is calling in from Andhra Pradesh. Anvesh, a very good morning to you. How can we help you?
Good morning. Good morning, Alex.
Good morning.
I am thinking to buy Zee Media. So at what level right now? Zee Entertainment.
Okay.
So right now it is right time, or at what level can I enter into that for 1 year?
For 1 year. Okay, I got your query, Anvesh. Sneha, I take this up with you. Is this the right time to buy Zee Entertainment?
If you look at the chart structure, yes, the counter has made a strong base around 90 for now. And I believe in case of any move above, say 110, 115, this counter may attract fresh volumes and some momentum-based buying can be expected. So at present, I won't suggest, but in case we see an up move above 110, one should be going ahead and taking a long-term buy trade on this counter. For now, I would say just wait. Only and above 110, go ahead and take it. And once we see an up move above 110, I believe 135, 140 can be achieved in very short period of time. So for now, yes, keep us watch at the levels of 110. And in that case, once you buy at those levels, I believe 98, 97 should be the stop loss in that case.
Okay, I'm coming back to you, Sneha, on the next one. Girija has got this question she's asking on YouTube. And by the way, you can post on that live chat on YouTube as well. And we'll do our best to respond to that. Camlin Fine is the name of the counter that she's talking about. 300 shares is what she's got. And she's wondering whether to sell. She's bought at a level of 160. If yes, at what target should she sell and what stop loss should she keep, Sneha?
If you look at the chart structure, I basically don't track this counter much. But if you look at the chart structure, I believe one can keep a strict stop loss of around 159 and keep holding it. In case of any move above 177, 178, we may see some buying interest. So I believe one can hold it for now.
Hold for now is a view on Camlin Fine. Girija, hope that answers your question. Naveen is calling us from Visakhapatnam. Hi Naveen, good morning. And how can we help you today?
Hi Alex, good morning.
Good morning. Good morning.
I have Wonderla Holidays shares, 35 shares at 628 price point.
Right.
It's a seasonal thing, but I want to hold it for a year, I can say. So just want to understand the long-term and short-term perspective.
Okay. So you want a perspective on the charts, right?
Yeah.
On the charts. All right. So Sneha, I'm coming back to you on this one. 628 is a buy price. He's in the green right now. Would you hold on to something like this? And what are the targets you would give both on the long term as well as on the short term charts?
If you look at the chart structure, we have seen this counter consolidating in a range wherein on the higher side, I believe there is a resistance around 690, 700 zone. On the lower side, there is a good base formation around 600, 610 zone. So in case of any follow-up buying above 680, 690 zone, then we may see a strong momentum-based buying coming in, which can at least bring this counter towards 770, 780 zone. So for now, if someone is holding, the first target would be around 685. And once we see an up move beyond this, one can expect an up move at least towards 770. For the second target would be 770 in that case.
Okay, so that's the view with regards to Wonderla. The next query is from Tejas, who is writing in from Nagpur. He's holding Tata Elxsi, 50 shares bought at 7,500 a piece, and he's sitting on a loss of around 1 lakh odd rupees right now, but he wants a long-term outlook on this particular counter. Samir, I'll come to you. Tata Elxsi, what's the view?
So we're positive on the space because we believe the opportunity for the automation in cars and what Tata Elxsi in general is focusing on is going to see. Of course, they have other businesses as well, other verticals as well, but Tata, this is one part of which we believe is going to grow. Yes, the stock has corrected quite a bit. I think you bought it on the way down probably from 9,000. It came down to first 7,000 where it settled before it had its next leg down towards about 5,300. Look, at this point of time, valuations are on the slightly richer side. They're not, I'll not say they're cheap yet, but we believe that once the growth starts picking up and once we see the traction happening in all of the spaces, verticals that they work at, we believe that will start happening in the next 6 months to a year. The opportunity for them is good. Profitability will increase. Operating leverage is strong. So we will see the valuations probably get better over a period of time. And then you will probably see an uptick. So if you have a long-term view of a 2-year view, I think you can make money and you should average the stock at this point of time.
Okay, average the stock is the view on Tata Elxsi. We've got a question from Ramkumar Jurigala, who's writing about angel broking and that he's bought at a price of 2,550. And so he's incurring a bit of a loss right now, but he's looking at a 5-year time frame. From that perspective, Samir, on the fundamentals, Angel One and angel broking is done incredibly well, right? Because it's shifted its model and it's managed to grab quite a bit of the market. Would you continue to buy at this juncture?
So honestly, I tell you, at this point of time, the entire capital market space, and I'm part of that capital market space, is something I think is probably a bit expensive. And I'll tell you why. Look, we are going through a period where volumes, activities in the market are quite strong. Let's put it at this. We've had a little bit of a pain point in the last 2 months, and you see retail volumes start to dwindle a little bit. New account openings reduce, SIP starting to slow down. So whenever I'm saying over the next 1.5 years, we're going to see a big fall. I'm talking of a market fall of maybe another 10 to 15%. And it's going to be a period of pain. Like if you see the next 1.5 years, it's not going to be a one-side up rally where everyone makes money and things like that. Now, in a situation like this, companies like Angel One, which rely heavily on turnover, because they earn their money when more people keep churning their portfolios or doing the activities. Now, the wealth side obviously will continue to earn, but the broking side of their business, which requires the volume, may see that go down. And then the operating leverage, which we've always discussed in this space, is very negative because the cost more or less for them is fixed in nature. And every additional turnover volume that happens leads to the revenue, which goes pretty much to the PBT. So when the negative leverage starts happening, the profitability will start going down. So whether it be BSE at this point of time, whether it be today, if you're talking, it's the biggest runner, I'm not denying, whether it be Angel One, whether it be MCX, CDSL, all of these we think can have seen negative leverage playing out, and that could affect, and the valuations are already on the rich side, so they could start coming off. So I am not a buyer in them. Having said that, you're right, Angel has done phenomenally well over the last few years. They've grown their book, they've captured market share. They continue to grow, so I have nothing against them, but I just think valuations and the negative leverage could work against you if you invest at this point.
Okay, so that's the view with regards to Angel One. We have our next caller, Avdesh from Chennai is calling in. Avdesh, a very good morning to you. How can we help you? Hi Avdesh, I can hear you. Go ahead with your query. Okay. All right. So his query is basically on Subros Limited. The company is basically into auto air conditioning products. Now, he wants a view on this particular counter. He's holding 20 shares bought at 600 a piece. What are the charts indicating, Sneha, for something like a Subros?
If we see the chart structure, this counter has been in a consolidation phase. But if we look at the recent weekly chart structure, I believe 540, 545 zone is the immediate support zone. And it is a strong support zone for now. And in case of any follow-up buying above, say 600, 620, then only we may see some buying interest coming in. Otherwise, there are chances this counter may continue to, keep trading in a range of like on the lower side 640 and on the higher side 610.20. That is the range for this counter. But in case of any up move above 620, I believe the chart structure is likely to improve, and we may see an extension of this move at least towards 690, 700 zone. So if someone is holding this counter, I believe one can hold it with a strict stop around 540.
The next question we're taking is also from YouTube, and this is Ajay Hulekal is writing in. Hind Petro is the name of the counter. He's got a long-term view that he's seeking, and he's got a level of 349. Samir, any view on this one?
So we have a view on it, of course, and the problem is, as much as we think that these companies can make a lot of money, given the amount of government intervention that comes in when oil prices move up and they don't allow these companies to make money, there's always going to be a clamor for cutting of prices, inflation, elections at every given point of time. We are never very positive on all of these oil refining, oil marketing companies, HP, BP, IOC. So we have never really invested in them, and we choose not to invest in them. So I would say an avoid from the way we look at it.
That's the view with respect to HPCL. We have our next caller. Ashok is calling in from Chennai. Ashok, a very good morning to you. I believe you have a query on M&M.
Is this right time to take entry in M&M because like in yesterday's news, due to yesterday's news regarding the tariffs in US, so auto sector got affected, and is it right time to enter in M&M or Tata Motors?
Okay, got your query, Ashok. Samir, I'll take this up with you. He's saying that because of the tariff news, the auto sector has corrected a tad bit. Do you think that this is the right time to enter either in M&M or a Tata Motors?
So honestly, the tariff news has affected Tata Motors. Mahindra is not down because of any tariff news because they barely have, I don't think they have any exports to the US per se. They are more so focused on the tractor business. They of course focus on the electrical vehicle business and the commercial, the cars and all of that, but the largest chunk at the moment comes from the tractor business. We believe the tractor business will do well. We believe the four-wheeler business will also see traction and do well, but competition in that space, we expect it to heat up even more. So we need to see if they're able to garner market share. So Mahindra actually, or unfortunately, has struggled with market share. Tata's have obviously controlled it, which is now being eaten into by MG and BYD to some extent. But again, we need to see how Tesla entry, how any other EV players come into the country and how that drives demand. But Mahindra, from a valuation point of view, is trading at about 28 times its core earnings. They have their valuation of subsidiaries, which if you add up, I think the valuations are quite attractive. One can look at, but don't look at it just because the price is down because of the Trump tariff. Tata Motors also is a stock that we like a lot. And that yesterday we saw the correction because of the Trump tariff. But overall, why the stock is down is because growth for them has slowed down in the Jaguar Land Rover, which is the biggest profit entity. We believe with China and Europe coming back to some extent, US may go through a bit more of pain. But with China and Europe coming back, they will be able to balance and make sure that they don't degrow, maybe even grow a bit, because at the end of the day, even if tariffs come in, these are high-end vehicles. So whoever's the purchaser in the US is not going to scringe too much, because all the other cars are also going to become expensive along with it. So it's just an inflationary cost. So I don't think they'll lose much market share. We believe the profitability for the company will remain strong. The Indian operations of the trucking will do well. Of course, there's a demerger, which is a value unlocking story. So I would like to say you can add both Mahindra and Tata Motors. If you ask me, my top pick in that space is Tata Motors at this point of time.
Okay, and I'm going to be very curious, Samir, to study the wholesale picture for the Jaguar Land Rover business for the fourth quarter, because in the third quarter it accounted for US or North America accounted for 36% and China was less than 10%. So if that shifts materially in the fourth quarter, perhaps what you're saying is something that everybody should look at very closely, of course. We've got the next question on call, I believe. Shrikant is calling us from Hyderabad. Hi Shrikant, how can we help you today? Shrikant, can you hear me? Okay, I can't hear you. I'm guessing your question is about investing fresh money into the mid-cap space, and you want to know which stock to deploy in. So let me go across to Sneha on this one. Anything looking attractive at this juncture? He wants to deploy as much as 1 lakh. What is the strategy that you would suggest?
At this point in time, yes, many of the stock has been corrected, and as we were discussing about Tata Motors, I believe one of the counters, it is not from the mid-cap, but yes, someone who wants to go ahead and long, I believe Tata Motors is placed at a very good levels. And looking at the recent, buying interest, which we have seen from the lower levels, I think that's the counter which can be picked. And apart from this, Geo Finance, I believe that is the counter one should be focusing on. And if someone wants to, invest 1 lakh rupees, I believe Geo Finance would be a good pick in that case. It has made a strong base around 200. And from that zone only we are seeing a buying interest. The volumes were good in last 2 sessions. I believe we may see an up move at least towards 270 to 80 in very short term, and the possibility of a move at least towards 300, 350, what we have seen earlier, is very much very much possible in a 1 year or a 1.5 year time frame.
Okay, so those were the picks that Sneha finds attractive right now. The next counter that we're talking about is Power Grid. Tom's Verghese has 200 shares of Power Grid, bought at 358 a piece. He wants to know this next 6 months view on the charts. Sneha, I'll again come back to you. Power Grid, what are the charts saying?
Last 3 weeks, we have seen a very, very good buying interest coming in. In fact, on the daily chart, on a weekly chart, I would say, it has, surpassed the 20 DEMA, which is a very good indication for any counter in a medium term time frame. Now it has been consolidating in last 4 days, but I believe if someone is holding, keep a strict stop loss around 282. And keep holding it. One can expect an up move at least towards 320, 315 is the level which I'm watching for this counter. It may take a little time because after a strong move, there are chances of some consolidation, but keep a stop loss around 282 and maintain your long positions.
It is now time for the rapid fire segment. Sneha, I hope you know what this is about. If you're not, then we throw as many questions at both you and Samir over the course of 2 minutes. Do keep your answers as short as you possibly can. A buy, sell, hold would also do. Irida is the name of the counter we're talking about. This is a question from Singapore. Lena wants to know, she's bought at 150. Should she hold is the question, Samir?
Oh, sell.
Okay, PI Industries is the next counter. Sankara Rao is holding 1500 stocks, bought at 3098 piece. What are the charts indicating, Sneha?
See, if you look at the chart, I would say that keep holding it.
Okay, hold. Shruti wants to know which FMCG stock, if at all, Samir would suggest buying for the long term at this juncture. Samir?
ITC and Nestle are the two I like.
Okay, Tilak Nagar is the next counter. Can I buy is the question coming in from our viewers. Sneha, what are the charts indicating?
Can be bought.
Okay, KEI Industries, 2,450 shares, bought at 3,000. Use being sought for 1 year. Sneha, would you hold or exit?
I would hold.
Okay, Heritage Foods, Bhanu Prasad wants to know if he can buy for 1 year or not. Samir, what's the view?
Sorry, no coverage.
All right. On the chart, Sneha?
I too don't track.
Okay. Hero MotoCorp or Bajaj Auto over the next 6 months, which would you pick, or would you pick your pick? Tata Motors, Sneha?
Tata Motors.
Okay. Kalyan Jewelers, this guy is a long-term investor and he wants to know whether he should average down in the dips. Samir, what's the view?
Yes, please do average.
Okay, NTPC Green, 88 rupees is a buy price, 6 months to 1 year. Sagar wants to know, would you hold? Sneha?
Yes.
Okay, Yatharth Hospital is the next counter. Rama Rao is holding 120 shares, bought at 510 a piece. What is the outlook like, Samir?
Sorry, again, no coverage on this one.
On the charts, if any view, Sneha?
I believe one can expect a move at least towards 520, 510.
Okay, quick view. Motherson Sumi Wiring bought at 49 rupees a share. Samir, hold or sell?
Buy.
Buy more. Okay. All right. So that brings us to the end of the rapid fire segment. Both Samir and Sneha, thanks so much for joining in. Always a pleasure having you on the program.
Thank you, Alex and Mani.
All right, and that brings us to the end of this edition of Ask Profit as well. Thanks so much for tuning in. Do stay tuned, lots more coming up over the course of the day. And this is NDTV Profit.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
You are very upset with brokers.
Why in this internet world do you need a physical person to show you houses, and why should I pay 1 month of my hard-earned money of rent to this guy? The way in which it has evolved in India is that even a pan wala can become a broker.
So you were bored of the steady paycheck at the end of the month.
So I think it was a sort of midlife crisis as to where am I going. One day we saw that some 50-60 people are standing outside the building, but they were actually brokers who wanted to break the office.
Buy or rent?
Rent. If you are not looking for emotional well-being.
Would you suggest that everyone who wants to leave their 9-to-5 job should do it?
I think huge amount of drive you should have. Just because you had a fight with your boss doesn't mean that you leave your job.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters world?
Welcome to KYC, that is Know Your Company, a show designed to give regular investors powerful and actionable insights into fundamentals of a single NSE listed company every day. Today on Know Your Company, we are going to talk about Titagarh Rail. Just a brief about what the company does and where the company's revenues come from. The company was incorporated in 1997. It specializes in transportation solutions that includes your semi-high speed trains, urban metros, as well as passenger coaches. In terms of the overall market share, it holds around 25 to 30% market share in wagon manufacturing. In terms of designs and manufactures wagons, it does design multiple wagons as well as overall designs in terms of container flats, grain hoppers, cement wagons, clinker wagons, also tank wagons. And the company has business interests in shipbuilding, bridges as well as defense. In terms of order book breakup, well, companies almost 43% of order book consists of freight rolling stock and around 57% comes from passenger rolling stock. In terms of its manufacturing capacities and capabilities, the company overall has 4 manufacturing facilities, 2 in Titagarh, 1 in Uttarpara, West Bengal and 1 in Rajasthan. Overall, in terms of its capacity, overall wagons has around 12,000 per annum, coaches is around 300 per annum. In terms of traction motor, that is 2,400 per annum, and liquid metal is roughly 30,000 MTPA. So this is with regards to what the company does and how the order book breakup is and how the manufacturing facilities for the company are. But in order to determine how the company is performing financially and in terms of what shareholding looks like, we are going to go through 8 different parameters. The first one being the income statement. Then we'll also go through the balance sheet as to how things are faring out for the company's balance sheet. Then we'll talk about how the return ratios are for the company. We'll also talk about how cash flows are panning out for the company. We'll also talk about how shareholding breakup is for the counter. We'll talk about what street cred looks like, how the stock performance has been, what the street coverage is, what our analysts talking about the counter. We'll also talk about how the company is placed as compared to its peers in terms of valuation. And lastly, we'll also talk about what the management guidance is, what is the outlook given by the management. And in order to discuss all of this, we're also joined by Anushi Vakaria, who tracks the space very closely, and she will take us through how the income statement is right now for something like a Titagarh.
Right, thanks for that, Mahima. So if you are looking in terms of the 3-year picture, in terms of how the revenue has shaped up, firstly in FY22, we did see a 3.5% of a revenue decline. But since then, FY23 being the softer base for the company, considering FY22 performance, we are looking at around 89% of a growth in terms of revenue. And FY24, that has continued with a growth number of around 37%. Even the margins, they have ranged from the 9 to 11 to 12% mark that we are looking at, 12% in FY24. While in FY23, we did see 9% of margins over there. So overall, considering the 3-year revenue CAGR, that stands at about 36%. In terms of PAT CAGR, we do see the 181% of growth number, but do note that FY22 and FY23 21 are not the comparables for the same. That is why on the softer base, we are looking at a higher CAGR growth number as well. In terms of how the 9-month FY25 picture has shaped up now in this year, so far we have seen a 2% of a revenue growth for the company. EBITDA margins have seen about a 30 basis points of a decline, while net profit has seen about a 6% growth. Now, concerns on the Q4 and the Q3 have been on the offtake in terms of the wheel supply from Indian Railways that had been pointed out before on how this could lead to the revenue growth of the company. So that is something that we should be watching out for the 4th quarter performance and how the overall FY25 will shape up for Titagarh Rail as we speak. In terms of where the order book positioning is concerned, now so far in 9-month FY25, the company had received 1,106 crore worth of orders. The order book standing at about 12,000, almost at 12,000 crore mark as of December 24. And these orders also include 13,689 wagons and 1,589 Metro and Vande Bharat coaches as we speak. So this is the overall breakup that we are seeing in terms of where the income statement is concerned. But Mahima, let's also talk about the balance sheet, right?
Right, absolutely. So in terms of balance sheet, where the equity share capital is concerned, it stands at around 27 odd crores rupees. That is remains similar as compared to FY25 as well, H1 FY24 as well. In terms of long-term debt, it has decreased a tad bit from that 37 crores to 31 odd crores. Short-term debt has significantly gone up in first half of FY25 to around 365 odd crores, and this is because of probably working capital requirements that the company might have taken short-term borrowing to kind of fulfill the order book that they have right now currently in terms of the Vande Bharat coaches as well as the wagons. Then talking about the cash and bank balances, it is a stable growth overall in terms of the net debt, there's particularly no debt net. It's a completely net debt free company right now, because the overall cash flow position is much higher than that of the debt that the company right now has. So in terms of balance sheet, we've given a thumbs up, because steady stake in terms of equity share capital, the long term debt is decreasing, and overall cash flow, the overall cash position remains strong, which is why it's a thumbs up for the counter.
Well, let's also speak about the return ratios that we are seeing now. ROE, roughly stable numbers is what we are looking at in the last 2 fiscal years. ROE stood at about 16.5%, which increased to northwards up to 17.8% is what we are seeing. Return on capital employed also 19.5%, which increased to 20.4% mark that we are saying. Anything above 15 is considered as a better indicator for the overall return ratios that we are looking at. Net profit, as we've spoken about in the past in the income statement check, in 23-24 onwards, we have seen a significant improvement over there. So this one metric, these two metrics are overall on a good picture, and that's why we have given thumbs up for return ratios as well. But let's also talk about the cash flows, right, Mahima?
Right. So cash flow position for FY24, in terms of cash flow from operation, it stood at around 92 odd crores, which has gone to a negative 235 crore in first half of FY25. In terms of net cash flow, it stood at 286 crores in FY24, but it's come to around negative 260 crore in first half of FY25. But overall, if we check the trend of the company, first half of every financial year in the past 3 years, they have recorded a negative cash flow, but that turns into a positive cash flow by the year end. So we'll have to wait and watch out for as to how numbers pan out by the end of FY25. So taking a conservative approach, we've given a neutral rating to cash flow right now, because overall net cash flow position as of FY24 ending stood at steady levels, but H1 FY25 right now the numbers are negative. That is why we've taken a neutral approach and given a neutral rating to the cash flows right now. But what is the shareholding pattern looking like?
Okay, so here we have considered the last 2 periods of the shareholding pattern which is there. So promoter holding remaining stable at 40.4%. But if we go back and see the previous quarters also, now in September of December 2023, this used to be around 42.5% of a mix in terms of where the promoter holding is there. From June onwards, it's where we are seeing this number 40.4% of promoter stake which is there in the company. If you look at DIIs, now there has been a lot of market volatility. Railway sector is one of those sectors which have been in focus. A lot of price correction taking place here. FIIs mix have gone down from 16.32% to 13.67%. This is as of the December 24 data that we have. DIIs also, there's a pickup that we have seen making up from whatever FIIs we've seen a downtick over here. So 13.9% to 15.01%. Government holding almost 0.01%, almost negligible here, but still had to put it out there. Public, if we are seeing, they hold about 30.86% of the stake in the company, roughly similar as the last period, 29.25%. But if we see the December 23, that's the last year shareholding of the company, that stood at about 25%. So public shareholding has improved over here, while the FII mix, particularly in these 2 periods, is what we are seeing has gone down. So overall, considering these parameters, we give this a neutral rating, right?
Right, and also a neutral rating because we've seen that the promoter holding has steadily come down. Now, if we see it in March 22, it was around 47%, which has come to around 40% right now. And FIs, as Anushi was mentioning earlier as well, at one point of time in December 23, it stood at around 20%, which has come down to around 13%, and that is because of market volatility. So overall, it's because of that reason that we've again taken a conservative approach here and given it a neutral rating. Moving on to what street cred and street coverage looks like in terms of the overall stock performance. 6 months, the shares have been down by about 33% 1 year, and of course 6 months performance for railway companies definitely has been it's been the worst patch ever, because railway companies have corrected quite a bit. In terms of 1 year performance as well, it's down by about 11% and 5 years the company has given returns of around 74%. So that's with regards to where the street cred is concerned. In terms of street coverage, overall around 9 analysts are currently covering the counter, if I'm not wrong, Anushi, and all of them have buy calls, and the return potential as per Bloomberg is around 39 times. But what are the valuations indicating right now, Anushi?
Okay, so in terms of where the valuation picture is building at, so most of these counters that we are seeing have seen a major correction in terms of where the stock price is concerned. So Titagarh Rail trailing PE, if you look at, it's around 38 times is what we are seeing. Jupiter Wagons, its peer comparisons if we take in the similar space, 41 times, and Texmaco Rail around 21 times. So compared to the peer metrics, we are seeing almost a neutral rating over here in FY20. If we even consider the forward PEs which are there, 35 times is what we are looking at in terms of FY25 forward PE. Jupiter Wagons, similar range, around 39 times is what we are seeing, and Texmaco remaining at 21 times level is what we are seeing. So overall, a neutral on where these peer comparisons are. Of course, these if you are looking at the multiples in the past, in the last 6 months or so, we have seen a significant correction because of the stock price correction also that we have seen, considering the outlook for the Indian Railways as well. So what used to be like a 50-60 multiple has now come down to these levels is what we are seeing for some of these railway names out there. But if you're talking about what's the outlook for the company, now the management did say its focus on some of the new verticals it wants to concentrate on, which includes the signaling and safety systems which is there, along with shipbuilding and maritime systems. In fact, we had asked the management about what is the outlook forward, and the next 3 years is something that we should be focusing on the growth levers for these two counters which are there. Overall, if you look at the margin picture, they are targeting a 13 to 15% of a mix in terms of where the margins are concerned. In FY22 to 24, we did highlight that we are seeing margins in the range of 9 to 12%. So they want to improve this mix to 13 to 15% going forward for the business. If you look at what has happened with the Vande Bharat trains, now deliveries of these have been shifted to March 26. So that is something that we should be watching out for on the deliveries, on how the order book execution remains for the company. Now that remains as a key monitorable. Even if you look at the passenger rail segment, they have been clocking in revenue declines, but FY26 is expected to be a pivotal year for not just the passenger rail segment but also the freight rail segment as we speak. In terms of where the production is concerned, they are targeting about 1,000 wagons per month production versus current capacity of 800 to 900 wagons, and expect this to ramp up to about 3,000 wagons as we speak. So overall outlook for the company remains on a healthier side. The near-term concerns being about the offtake of the freight rail segment, which had been the better performing segment as compared to passenger rail. But so Q4 numbers would be awaited on more clarity on how the management commentary is on the same on some of these concerns which are there, right?
Right, absolutely. So the outlook definitely looks strong, and which is why we've given a thumbs up, and that brings us, to the end of the entire 8 parameters that we have calculated. We've given a thumbs up to the income statement, thumbs up to the balance sheet as well. Return ratios definitely on an increasing trend, and hence thumbs up. Cash flow, since for the first half of FY25 has negative cash flows, we've taken a neutral approach and given it a neutral rating. Shareholding, again a neutral there, because FIs and promoters have steadily decreased their stake, and street cred is a negative because the stock has seen significant pressure in the past 6 months as well as 1 year. Outlook and street coverage, definitely a thumbs up because the company has set out their particular guidance and outlook, which looks pretty strong. And lastly, in terms of valuation picture, it's at par with how and where the peers are trading. Of course, the 2026 picture looks better as compared to where the 12 months trailing stands at right now, which is why we've given a neutral rating, and the overall rating for Titagarh Rail turns out to be around 5.5 out of 8. Now, let's also shift focus and hear it from the management itself. Anushi earlier spoke to Titagarh Rail's Deputy MD, Pritish Chaudhary, who talked about the company's growth outlook going forward. Listen in to a slice of that conversation.
You see, Q3, as you rightly mentioned, there were issues in the rail wheel factory in Bangalore. What exactly the issues were in the factory are not really known to us, but there were issues, the production issues in the rail wheel factory, due to which the supply of the wheel sets for the Indian Railway contracts was slowed down. And as a result, the wagon production for Q3 was a little muted than what we had expected. In Q4, the situation has improved a little bit, wherein the production has ramped up. The Railways has also taken certain steps to improve the availability of wheel sets, such as allowing for imports from China and things like that. However, the situation is still not completely normalized. We do expect that by Q1 by the beginning of Q1, the situation should come back to normal. Q4 has definitely improved as compared to Q3, but as I just mentioned, the situation should be normal only by Q1.
So considering that the impact that we had seen in Q3, what is the kind of trend that we are picking up for Q4? Would there be an impact on the business performance, on the revenue growth of the company for this upcoming 1 to 2 quarters as well, if you can give us a picture? And even in terms of production, are we still steady with our output of around 12,000 wagons per annum production? If you can give us a perspective on this aspect as well.
Sure. So our facilities and our internal capabilities are fully geared up to cater to the 12,000 wagon per annum production numbers. But there are sometimes external factors like the ones we've just discussed that kind of hinder that ability. So for this financial year, since we are almost at the end of the year, I would refrain from giving out any numbers for this quarter or for this year. However, compared to the previous quarter, the production has definitely improved. For the coming financial, we expect that since the situation would be normalized, we expect that we'll be in our targeted run rate of 900 to 1,000 wagons per month.
Okay, so 900 to 1,000 wagons per annum is the kind of, per month is the kind of production that we are still maintaining. But considering now the 9-month picture, if you see the numbers, revenue had seen about a 2% of an uptake, margins were in the range of 11%, while net profits saw around a 1% growth. So if you exclude the Q4 part and go to FY26, what is the kind of growth that you see in terms of revenues and the margin picture? You're seeing that the margin should be in the range of 13 to 15%. What would be the levers which would drive this margin expansion, and what is the kind of revenue growth that you're expecting?
Sure. So we normally do not give forward guidance and comment on future revenues. So I'll refrain from doing that. As far as the margin profile is concerned, in the FRS business, which is the wagon business, we've always maintained that between a 12 to 13% EBITDA is a sustainable level, and we will stick to that. On the PRS business, however, which is the passenger side, there is the possibility of expanding the margins up to 15%, but that only happens in a few years.
Mr. Chaudhary, can you also talk in more detail about the PRS segment that you've mentioned, the passenger rail? What's the kind of outlook that we are building for FY26? Because it's going to be a pivotal year in terms of where this segment is concerned. So just wanted to get your overall outlook in terms of the growth numbers here. And as you mentioned, 15% is the kind of margin expansion that you're looking from this segment.
Sure. So I as you rightly mentioned, I think FY26 will be the pivotal year for the PRS business, because you see all our projects which have been in their design phase, which is the Ahmedabad Metro, the Surat Metro, as well as the Vande Bharat, all of them will start execution at different points in the coming financial. The Bangalore Metro project that we're doing with CRRC, the series production for that picks up right at the beginning of Q1 actually of the coming financial. So FY25-26 would be a very, very interesting year as far as the passenger business is concerned, because the revenues start coming in and the production starts ramping up. As far as margin targets are concerned, for this, for the next year and 2 years, we would not be targeting a 15% EBITDA, ma'am. We'd be looking at stabilizing at a 9 to 10% EBITDA. And this further expansion from 10 to 15% will actually happen on account of the backward integration that we're doing, which is the propulsion for the metros. But that absorption of that technology will only be completed by 27 or beginning of 28.
Okay, that is quite interesting to hear about what's the outlook for the passenger rail segment. But coming to the overall order book picture, want to get your perspective in terms of the overall execution that we are seeing of the current orders, be it in the freight or the passenger side of the business. What are the kind of new order inflows that you're seeing? And also wanted to understand your sense of a pickup in the private ordering side that we are seeing as compared to the public capex side. So if you can give us an outlook on that as well.
Sure. So just about last month, we've announced, or maybe a month and a half ago, a new order that we received from Adani, from the cement. Similarly, we are very confident that a lot of the large cement players, steel players, logistics companies, and many private companies will have a strong demand going forward. But as will the railways, there may not be any immediate tendering, but we do believe, and in fact, this morning there were some media reports which stated that in the next financial, the railways estimates a 15% growth in capex. So we see a very strong pipeline for demand in both the FRS and the PRS segment.
Right, and coming to the new growth drivers which are there, which is the signaling systems and also on the shipbuilding and maritime side, want to get your overall perspective on these two segments. What's the kind of growth picture that you're seeing, not just in this 1 year, but even in terms of the long-term picture, let's say 3 to 5 years, if you can give us an outlook on these two segments, what's the kind of capex that you're looking for? What's the kind of margins that would be, is it in the similar range of what the existing business verticals currently hold? More perspective on these two segments as well.
Sure. So these two new businesses in the next year would not really contribute much to the revenue or to the bottom line because they are newer businesses which would have to be nurtured. The key metrics really to look out for these two businesses for the next year or year and a half would really be the order book that we're able to build, as well as the kind of partnerships or associations that we're able to sign. Now, as far as the potential is concerned, you see, as for the signaling and safety systems, this seems to be one of the key focus areas for the railways, for the Ministry of Railways, for the next few years to come. Enhancing the general infrastructure and safety infrastructure and the signaling infrastructure. So we see that market or that area as an area with a huge potential for growth. Similarly, for the shipbuilding, apart from just the domestic potential which the Indian market has, which is very evident because of the focus that the government is also putting on the sector right now. The international market or the export market would be very, very interesting to look at. As you're probably already aware, roughly 90% of the world's ships are only built in 3 countries. And India has a huge potential to kind of break into that market and establish itself as a leader. So that's the angle, or that's the vision that we have for this segment, for this sector. And the detailed capex plans, etc., I would share with you as time moves along because we're still deliberating on those internally. So I'll refrain from sharing too much.
Okay, that's fair enough. So considering that this is the kind of outlook that we are building for these companies, just wanted to get a margin picture sense as well. If the margins are going to be in the similar line as the 2 verticals which you currently already have, if you can share more details on that.
As I mentioned, ma'am, we are currently formulating our business plans and our growth path for both these businesses. So I will refrain from sharing too much on these. However, if you look at the global trends for other companies who are in these segments, the EBITDA profiles generally tend to be a little bit higher than our 2 existing businesses. So that's just the way the market is. But what our plans are and our expectations are, we'll share with you as time moves forward.
Sure. And my final question to you is about the ongoing participation in the various metro tenders that you currently have. Wanted to get your sense on what's the kind of outlook, some of the key new orders that you're bidding for are already in pipeline, if you can give us an outlook on this.
Sure. So there are tenders for Mumbai which are live. There is a tender in Bhubaneswar that is live. Just a few days ago, we were reading in the news that new tenders for Gurgaon Metro are going to come out. So the metro market is booming in India, and it will continue to boom for the next 5, 6, 7 years. Because you see, every week we wake up and we read the news and we see that some city has either announced an expansion of the metro lines or they've announced a new metro altogether. So the metro market is very, very interesting in India. And we are keenly awaiting the outcome of the Mumbai and the Bhubaneswar tenders, which we hope would be clear in the coming weeks or months.
All right, so that was the management of Titagarh Rail indicating as to how the roadmap of the company looks like. But with that, we're completely out of time on this edition of Know Your Company. But stay tuned for more news and updates on the other side.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings